Wednesday, April 3rd, market analysis, Stan Ehrlich, and I'm starting out with the stock market indexes, then futures, as I always do. But this morning, I'm going to give you the bigger picture here on the most popular index, the E-mini, the S&P 500. This is the SPY. It's the same thing as the E-mini, except, bigger contracts. So when this bottoms out, so does the E-mini, vice versa, if you want to think that way. And we've had an extremely good rally from last October lows. Very strong, very straight up. Won't last forever. So here's the assumption that we are actually in the beginning stages of topping out, and I'll go into detail in a moment. Several reasons. Divergences, overbought conditions, minor double tops so far, and also minor downside breakouts so far. But let's go back to the bigger picture. Since the COVID crash, we had an extremely good long-term bull market. Fine. That's typical in, 5-10 year plus bull markets. And a substantial correction, a mini bull market, a bear market, if you wish, from the beginning of 22, down to October of 22, October 13th, to be exact. The October lows again. Then a bull move up into the summer of 23, last summer, and back down to the October lows again. I remind you, in 30 years, we've had an October low 27 times. Now, this last rally has been very substantial and even a bit steeper, stronger, faster, quicker than what we've seen over this last few years. Let's start looking at the detail real quick. And these commentaries are going to be for the DIA as well as the QQQ for all practical purposes with minor variations. So what have we got for the last few weeks or a month or so? We gapped up. There's a gap to close down below at around 503, let's call it. Today, we went up within 2 ticks, 0.02 of closing the gap completely on the spider when it gapped down yesterday. So that's done. I keep telling you, gaps are almost always closed. I think leaving 2 ticks behind is acceptable. But we're still relatively close to the high of the day. We really haven't gone down very much. It's only showing us signs of getting a little toppy. And now let's look at the 1 minute spider. Here's your bull move in detail, 1 minute, going back to January 28th. So the last couple of months. This level, the blue line for the SPY at 506.37 represents a pretty heavy duty support and resistance level. I'm thinking we're going to get down to fairly quickly. A week. So maybe it'll get oversold and bounce off of that. There's another decent one just below it right here. I didn't draw a line in. And then another one. But if I'm going to go back to the daily chart one more time, the real support area I think we're going to go down to is 477. 477. We are trading at 520. That's a pretty good break. So it can't do it in one, well, it won't do it in one day. But it's going to take, I'm thinking, between 1 and 2 months. And then we'll be on the way back up again. And probably top out summer, late summer, September, to go down into the October lows again. I'm expecting this year, like most of the time. All right, let's look at the E-mini in detail. We are challenging a support line, the bottom of a channel, if you like to call it that, pretty close. And trying to break out on a closing basis below that support line. That's going to be further evidence that this little double top which was only the first high on March 21 with the second high this Monday, April 1st, is going to work out correctly. We have already started to break below the low between the two highs. But remember, this is a very tiny 7-day pattern, and it didn't go down too much between the two highs. So I don't give it a lot of credence that we dropped below and broke out of this little tiny thing. Much more important to me is how it handles the support area at 51.21 for the E-mini. That is equivalent to the line I had on the S&P, the trading range that we had a month and a half ago. But like the spider, I am looking for a larger correction down to 4,900 or so, 4,900. This line starts at 49.06, and I could see it going down to 47.90, maybe. But in this zone, a month or two from now. Next chart. This happens to be the E-mini. It ran up at this point where it flattened out right there is where the S&P spider closed its gap, dropped off immediately. Perfect place to go picking, short sale scalps, gap closures on a rally. And tried to get it in a new high again, didn't. Came down to a minor new low, but we're still fiddling around here. I'd love to see this thing close around unchanged, if not even lower than yesterday's close, which means, yeah, we came close to it on the last break. So making it a little bit lower than this last break about half an hour ago would make me happy, because as you know, I'm looking for this downside correction. Next chart, Qs, also came up, closed the gap on the daily data chart, but it's still hovering around the highs. It added a little bit more. Gaps are not usually closed so accurately as to leave a couple of ticks behind, or maybe close the gap by an extra tick or two. Usually it's a little bit much, or maybe not quite as much as needed. This is the QQQ 5-minute. Popped up, came up to the low of the previous day, went up a little bit further, and starting to back up some. Let's see what happened. The end of today could be pretty important, in fact, especially if there's a large move up or down from where we are. If we close around where we are, that's okay, as long as we start going down tomorrow or very, very soon. Next chart is the NASDAQ futures contract, June, and there's your little double top. But the second high was not this Monday. It was a week earlier. Now, during this last week and a half or so, it's slid slightly, not too much. So I need to get down to this little support area and then close below it in order to have a breakout of the double top formation. The lowest low between those two highs is right there. So breaking below this little blue yellow zone here, support zone, not super important, but obviously some support and resistance over the last couple of months. And my downside objective is going to be in the ballpark of 16,586 and a little bit lower. It basically is the trading range around mid-December to mid-January. Now, NASDAQ, 1 minute, 5-minute chart. On the rally, there was no real gap to close here. On the rally, it just came up to a resistance from the last several days, poking up against most of these lows, and is looking like it could fail, what I'm hoping for, and maybe before the close today, we'll see it, I expect to make new lows from a half an hour ago, and let's see how far down it can go if I'm right in the first place. The Russell 2000 on a long-term chart here, looking at a few years back, about 3 or 4, did break in a new high ground in the last few weeks. That's long-term bullish because of the extended time frame that you can go back until you see the same price highs. So one correction came into support, bounced, and actually made another new high. And that was in the last few days. So it's pulling back again. Now there is a gap left behind of size So it did not close this gap at all. It closed very little of it. And it does have an outside trading range day at the moment, a bullish engulfing candlestick. But I've got no buy signal, ER green buy signal. I've got just simply a bullish engulfing, which implies it could rally still and then maybe close the gap. If that happens, then I'm going to get more strength out of the other indexes, highly likely. I don't really want that. Let's leave this gap behind on the Russell 2000 and close it a lot later. Next, 1 minute chart on the Russell. See, there's the gap. And we only closed just a little bit on a couple of rallies this morning. Now bonds. Currently a little lower for the day, not much. But we made a new low. And that yesterday was already a minor new low since the beginning of December. So that's a significant amount of time on this daily data chart. We seem to be in a relatively good looking bearish channel or downward slanting channel. Downward slanting channels are bullish eventually. They usually break out to the upside and continue the trend that was in place before that, which was up from this fabulous buy signal I got on October 23, the exact low day of the bear market and the beginning of this bull market to the exact day, October 23. That's the October lows, but I meant in the stock market stuff, not necessarily interest rates, but that's the way it turned out this year so far, or last year, I should say. Next, 10-year notes. I can expect to see a little bit lower levels. Today's low is my horizontal cursor line. And look at this. We have a minor double top in the 10-year notes. And if you measure the depth of it from the average of the two highs, or, you know, that works just fine, or the highest high. I'm not going to make any significant difference here. And you know what the depth of the formation is. You take the same depth, which is this little yellow line I've got, and move it down to its minimum downside expected objective. Heck, we're almost there at today's lows. I can be a little bit more bearish than that. I don't think we're going to turn into a double bottom since the October lows and challenge those lows again. I believe we're going to be bottoming out well above that, and I'm expecting it to be, frankly, about the level of the objective, 108.26. We'll call it 108 area. It's fine with me. And again, because I don't think it's going to be coming down real hard and fast, it's going to take another few weeks, about what I think for these indexes. So they're falling into place timing-wise and somewhat also technically. The 10-year notes on a 5-year 5-minute basis has made new lows, lower than yesterday's lows. And let me go back to the chart on the daily. There it is. So we've been zigzagging our way down. Last couple of days ago, we had a big hard break, and it's perpetuating itself. Broke some important support levels. Next, crude. Now, this is the second day we're overbought. We can, I'm not necessarily expecting it, get all the way back up to about 90. It wouldn't totally surprise me. It could happen pretty darn quickly. The end of a bull move or a sharp rally is typically exactly that: sharp, big, fast, sizable. And they typically get overbought in the process, and then that's the end of it. We're overbought now, and it's been a pretty strong rally for the last week. I'm looking for a top any old time now, but wait, they still could pop up to 90 yet, which is, you know, another $5 not to be ignored. So don't jump the gun. Next, natural gas. Also oversold a couple of days ago and therefore rallying, but I don't see much of a bull move here. We're just barely getting into some resistance, and this trend is pretty convincingly still bearish. So I don't think we're going to see too much of a rally in the natural gas, and then all the energies will turn down together. Gold. Wow. Okay. So like I said, these overbought conditions and little blow off tops. It's a small one, not like cocoa at the moment, or what happened in orange juice also because of green tree disease, I believe. I don't know what's going on with the cocoa crop, but something bad. We'll get to that in a minute. Gold is new highs. Still, we have a divergence, but not as much as before. The high in the RSI is not as high as about 4 weeks ago, about 4 weeks ago. And the price is way in the new high ground from 4 weeks ago's high. So that's a divergence. And the fact that it's overbought for quite a substantial amount of time, I have to be looking for sudden bearish engulfing sell signal, maybe something similar to December 4th, but it could be a lot milder like we had on October 31st. We'll see. I would not recommend being a buyer at this point. You're buying into some sort of a high that's going to be opening, maybe opening a lot lower all of a sudden the next morning, and ouch. Next. Same comments for silver. No surprise, except I am disappointed my good sell signal several days ago didn't do as well as I would have hoped. It made, it did all right. It dropped off to new lows for a few days, and unfortunately that was it. I thought it was going to come down a lot more than that, which it didn't. We got caught up in this strong last 4 days. We're back to where we've topped out before. In fact, many times. At the moment, ladies and gentlemen, we're high and last, so it certainly doesn't look like it's about to go south. But we are in the price range. We appear to be in a approximate appropriate time frame. I might do some cyclical work on this. This looks pretty interesting between here and here and here, and say here, and also back here where we had a double top with two signals on the two highs of the double top. Whopper. I don't see that every day. Again, we had a sell signal on the first high and a sell signal on the exact second high way back in April of 23. Yeah, a year ago. Now, prime target for a reversal. Watch out. Platinum. So, sideways, rocking a hard spot. We're coming up a little bit more, probably getting dragged up because of gold and silver. And 950, yeah, near high and last. Maybe it's going to rally up to this little resistance area and then come back down. I really can't tell. This is a lot of messiness at the moment. Not too much to say or do. Wait, next. Copper. Now, I pointed out yesterday for the first time, and I should have seen this way before this. I apologize. We have a head and shoulder bottom in copper. It's a complex pattern. Here's your first shoulder, and it was way back on May 24th. The bottom, the lowest low, is the head of the formation, October 23, but it really is the previous 2 or 3 weeks before that as well, and maybe a little bit of time, a couple of weeks after that also, so it's a month, but there's usually the lowest low, and we'll pick that one, that date. Now, a little sooner than would have been expected with the usual time measurements, we have another low that is almost the same price level as the first low. Those are the two shoulders. Exactly, almost exactly the same level. You can't ignore that. And the head of the formation is approximately in the middle, which is perfect. Plus the fact that you've got a neckline that slants downward slightly over the whole process, where the neckline was, that's not even a you don't know that's a neckline yet because you're still looking for the last shoulder low, which happened. So then you come up and test it, and it's already got 3 points on the line instead of just usually 2. And then it comes up and stalls out for 3 days, and finally, kaboom, it blasts through the neckline in a classic breakout fashion with a couple of extra days with the strength. Retracement usually is about halfway down to the neckline, or maybe all the way to the neckline, but the rule is you're not supposed to go below the neckline. If you do, don't close there. And that's the hard, fast rule, basically closing back below underneath a neckline after a breakout. That pretty much kills the formation almost always. Anyway, that didn't happen. It came back halfway to almost the line and went right into new high ground today. Look at this. My minimum upside objective is 4.3825. give or take a squeak or so. And guess what? That's right around the area where it topped out in January 23. Resistance. So what can I say? It's on its way. I should have seen this before the breakout, probably around February 19th, give or take a day or so. That's when the price levels and the shoulders and all that started to fall into place. And then talk about what I just mentioned. So bullish on copper, but we're halfway there already, if not more, to the objective. And we're overbought again. I would expect one more retracement back down a little before the objective is reached. Next chart, soybeans. Okay, interesting. After a new low, no surprise. You know, I'm basically bearish in the grain complex overall, but I'm trying to see if I can find some evidence toward a long-term bottom, and I just can't come up with it yet. But there are some things that might be in the making, which I don't want to talk about yet. So new low for a couple of weeks, but we're strong at the moment. We're back up above about the middle of yesterday's range, but that's a very thin layer of resistance. I don't know. Unless this thing had a whopping big rally at the end of the day to close back up above 12, for example, another 15 more cents, then I would get excited. But I don't think it's going to happen. I'm bearish, looking for a test of the lows and maybe new lows for the whole trend, and that's for years. Next, soybean oil has rallied and got overbought, pulled back, no surprise, but a couple of days ago managed some strength, and we're back into the minor resistance levels. But I don't think it's going to go very far for very long. You got more problems above the market than you do support below the market. So I'm looking for a test of support again fairly soon, waiting for a signal. I'd like to get overbought a second time, which implies maybe a minor new high. Next, meal. Testing support, today's low is right on it. That's nice. And it's currently higher on the day by $1.70. Not too much, but something. And maybe it's going to bounce back up again to the resistance where it just came down from a week or two ago. So we're between the rock and a hard spot. Next, we got the corn in support for the last couple of days and managing to hang on so far. But if it does start to rally, again, I just can't come up with too much of a bullish commentary. At best, if it started to rally, I could say maybe up to about 465. 30 cents. There's a chance and a little bit more than that, but that's the best I can come up with right now. Instead, I think it's going to go back down to new lows and break out of this support level to the downside. We did catch the corn market on the exact low day with my ER signals. That's good. Made a nice trade. Next is wheat, and we caught wheat on the exact low day and the day before. Not necessarily good. But the low day was green, and that's what you look for, or red on a rally high for my signals. Now, resistance, not much. Maybe we could get up to a bigger resistance level. I kind of doubt it. Right now, we're up a little bit on the day, and we might end up with a bullish engulfing, but we're not oversold. Bullish engulfings without my oversold condition, to me, imply maybe a little bit more of a move up a day or two and nothing major in price. Next, wheat. And this is the 1 minute. So as you can see, it's still bouncing around the same levels as we've seen for the last few days. Next, cattle. We caught something close to the bottom in cattle, had a nice ride, no pun intended. Not a cowboy or much of one. Anyway, new low again today, still hovering in that oversold condition. Not too badly. There's a chance it could drop real fast all of a sudden again. But at any time near yellow or oversold, and oversold yellow, you can be yellow and overbought. That's just a warning that it's going to turn. I would be looking for a potential buy signal, and we're not too far from yesterday's high. If you could rally above yesterday's high by the close of the session today, then I'm going to have a green bullish engulfing ER official buy signal. That would be interesting. I don't think it's going to happen, but I am looking for a buy signal because we're oversold. Hogs. Okay, coming up again to that resistance area, getting very close to overbought at 72 at the moment, and it's been a little bit higher than that. So guess what? If you pop up a little more here in the next day or a few hours or a day or two, you're going to get overbought. You're going to be poking right at that resistance area, just like it did back here on February 22nd. And I would expect it to do pretty much the same damn thing. Turn around and slip right back down to support. Okay, let's look at the ICE market, but I have to flip to TradeStation to do this. Just a second. And there we go. Bingo. Unleaded gas broke out of a little channel to the upside. New high close. Looks like it's going to continue to go up some more. But remember, we're very close to being overbought again. And the last time it was overbought, it dropped off, not a lot, but, for a week and a half, something like that, about a week. Next, the pennant formation is really getting a little weird. We broke out of it to the upside, which is what they usually do. If you have an uptrend before the pennant starts, they're usually continuation formations. So we broke out of it on the 25th of March and came back into it again. But as it tested this bottom of the pennant, which it really shouldn't have come back into the pennant again, it had another bullish engulfing. So the next day, which was yesterday, it backed up a little bit, held at the top of the previous pennant. Perfect. Except this morning, after opening around unchanged, it dropped off a tiny bit below the pennant top. Not that big a deal. And now we're back up to a decent close. And if we can close above this high of 377 and a quarter, we'll be on our way up some more. And probably a nice chunk, I'm going to say up to 390, maybe a little higher. Yeah, I would say maybe up to 400, in fact. Next chart. Well, here we have a break, finally, in cocoa. May cocoa has now gotten below the last 3 days and close to the low of 5 days ago. And if we can close below 9,261, I'd have to say we have a high or a top in place that could be very bearish very, very quickly. These blow off tops usually do exactly that. They just blow off some steam, die, and go right back down a lot and super fast. So let's see what happens to this. I'm very sorry I didn't get a bearish engulfing. I got a bullish engulfing at the tie of this whole move. And I've sometimes called these outside up days or bullish engulfing candlesticks in overbought conditions as a backwards reversal. All I had to have here was a closing price on that day, April Fool's Monday, a close that was lower than the previous day's close, and I would have everything I want. Outside trading range, overbought conditions, very overbought conditions, in fact. And all I'm lacking is the bearish engulfing, and it had a bullish. But I've seen this many times. I'm not quite sure how to handle it except to mention it. And I don't think I did on Monday. Maybe it hadn't happened yet by the time I was recording. So I don't know. Coffee. Well, there goes my chocolate habit. And I'm going to have to back up on Starbucks a little bit. Sorry. This is going through the roof the last couple of days in coffee. This is a new high for quite a substantial time frame. Yep, you got to go back, and this is the futures contract. It's going to go back to May, September of 22, well over a year ago, a year and a half. So that's not particularly deflationary. Anyway, there goes your latte. How high? Well, maybe up to 220 again. And it could happen super fast. I remind you, it's already gone from 190, yeah, let's call it 190, in 2 days, $15 to 205. So if you do another $15, you're going to be up to 20. Just like that. Next, sugar, slightly lower, nothing going on, broke a bear trend line, not that important to me. I'm not the world's most trustworthy person about trend lines. They're interesting. They work a lot of the time. I get a lot of false breakouts sometimes, so I don't think I'm drawing them incorrectly. I've had plenty of practice. I just don't use them as much as obviously RSI or bullish and bearish engulfings. So this looks like it could work its way up a little bit more, but we're kind of between a rock and a hard spot. Going back to cotton, this is great. Look at this. We're now halfway down on the head and shoulder top formation. I told you it was coming in advance before it broke out, and that was in the neighborhood of the middle of last month, March, right? Broke out to the downside the 14th. 2 days later, tested the neckline, a little bit above it at one point, but it closed below it. That's okay. A little scary, in that rally. Not classically supposed to happen. Started to come down 1, 2, unchanged, 3 days, 4 days, and made plenty of new lows. A little bit of a bounce has already happened. I mentioned that could have been the end of the bounce on that day as well, 6 days ago. And new lows today for the whole trend down. Looking great. And it's not that close to oversold yet, leaving potential elbow room for another sharp break. I don't think it's going to hold up very well at all. In fact, by the end of this week, what is this, Wednesday? Yeah, okay, 86.5, maybe lower. Then we're going to be oversold and a bounce. And finally, in a week or two, downside objective, or if not lower than this, at 83, that's my objective. And we're back to RBOB. You guys have a great trading day. Thank you very much.